Good morning. Happy February 10th, 2025. Let's look at what's going on in the market. So we have a market with a big ranges, obviously. We keep going higher, gapping down, going higher, gapping down, going higher. Then we gap down again. And we opened down here at the bottom side of the range, and then we started getting some buyers, and then we left some single prints once we enter into Friday's value area. I think that people were trying to short here and then they got squeezed, and we left this poor structure here. Now we left some more single prints, and it looks like we're traveling through the whole range, right? So now the 6100 becomes the next big magnet. We have this area of single prints from Friday, and we have this low volume area up here that's going to be some resistance. So if we stay above this area, then 6100 is the very big obvious level. And then we'll see if we can hold below this 6110. Hold on, let me turn off the tick strike because it's driving me crazy. Hold on. Okay. So I was saying that if we hold above the 6110, then the previous week's high is vulnerable, and we have this distribution up here. So 6128, 6130 are the targets there, and then this is the next high that traders are going to start looking at, which also has a lot of volume and an untested point of control. That's right at around 6148. And then above that we have January high, December high, all times highs, right? But now we're opening inside this range, right? So the first thing that I'm going to be looking at is, do we come back inside value from Friday and then do one of those value area sweeps and then come down again? Or do we hold above Friday's value? And remember, and whenever you have an area that we've been ranging for a while and we have all this volume, it's choppy, right? It's not good spots to look for trades. So if I'm trading here, I'm relying on order flow, and looking for levels from the previous days, right? Value area, the point of control, etc. But just know that in this area it's gonna be choppy, right? Like you can see that all these levels have a lot of volume, so it's not a good profile that's formed here. So traders are not able to agree on where value is. So you could make a case to go either way, and to any of these levels with lots of volume. So take it one level at a time, and remember also Trump likes to tweet, and the market likes to react to that. So we're still gonna have plenty of volatility. We have at 11 we have New York Fed inflation expectations that could be a market mover, and then we have 6 months, 3 months bill auctions at 11:30, and then we have Trump signing executive orders at 1 p.m. Coca-Cola earnings tomorrow, Powell talking tomorrow, Fed speaking in the afternoon, etc. And then we have CPI numbers on Thursday, Friday, Wednesday and Thursday, I'm sorry. So there's still plenty of room to move through outside of this range, and I was showing earlier, seasonality speaking, February tends to be, I've been talking about this for a while, right? Like it tends to be very bullish into the first half of February, right? The first couple of weeks, and then we have this drop that I was looking. This is the last 5 years. If you look at the last 20 years, you can also see that there's a drop there into second week of March. So I'm not calling for a drop, but seasonality usually works pretty good. So keep that in mind. I'm gonna start peeling off some of my longer term longs by Friday, and then having some hedges ready just in case. But yeah, keep that in mind. And Q, same thing as ES, open with a gap, got bought up all the way up here, broke through all the resistance levels, all the resistant areas. You know, this keep getting squeezed higher, and it's likely due to these flows, you know, February flows, right? So that's why I'm not surprised that we keep just moving higher. Watch this 840 area for resistance, and then above that 910 is the next target, and then the previous week's highs right here at 21,968, and then we have January high up here. So kind of same scenario, right? If we get back into value, which is for NQ is at 21,738, look for value area sweep, and in this case the Friday's point of control at the same level as the 20-day point of control, which is around what is it, 2100 580 590ish, 588, something somewhere around there. And then we have this buying tail with single prints that we can start repairing here. So okay, so that's it for that. Then crude, I posted that picture yesterday before the open, and I had marked this area. Let's see. Let me open this so I can show what. So I had marked this this point of control. Like if we get here, then we're likely to turn and come back to the area. So now, if you look where we are at, we opened and we started rallying. We tested that, the monthly pivot, which is that low volume area, and now we're coming back. So if this doesn't hold, then I'm gonna be looking for that 71.15 area to be retested, and then if we break above the 72.20, then look for I marked it here, 72.70. Okay. Gold is ripping, still on an uptrend. You can see that clear uptrend, clear channel. There's really there hasn't been a range established in a little bit, so I haven't looked at a upside target on the long term, and I'm not going to, but just stay long. I mean, I don't know what else. There's nothing. I don't know what this is, but probably traders are gonna start looking for the 3,000 now, a big round number. So don't sell gold. That's my non-financial advice. All right, that's about it. Good luck.